Hey guys, so per usual, everything on this channel is intended as educational information and not as financial advice. So we hit 500 subs, pretty cool. Thanks for the shares and the likes on the last altcoin video. Pretty great. Today's video is going to be about Heikin Ashi candlesticks. I guess they're not technically candlesticks, but Heikin Ashi. So there's a bunch of math involved as to why they look like how they look. I'm not going to talk about that. I'm just going to put it in the description if you want to look at it. The most important thing to learn, though, is that Heikin Ashi is not raw data like the candlesticks are. There's some manipulation of the candle open and candle close. So because of that, things like chart patterns tend to be invalid. But the benefit of Heikin Ashi is that it helps you identify a trend and eliminate noise. Basically what you're looking for in I'm just going to zoom in on something here. This is 4-hour China. We've pretty much been sideways for a while, so not much to see here. But when you're looking for a bear trend, you're looking for these Heikin Ashi candles. Basically the open does not go above the previous open. The other thing you're looking at is the close. The close does not go above the previous close. It does here, but when you're assessing the strength of the trend, the momentum of the trend, okay, you see large candle bodies that are lower than the previous open if it's a bear trend, and you want it to be lower than the close if it's a bear trend. That's a bonus. It doesn't have to be. You can see this shows strength, and then when you get these dojis spinning tops on a regular candlestick chart, that's when you notice that the momentum is slowing down in the bear market. Okay, these are green, but so generally what people do is put their stop right above the first doji. Okay, so if you got in on this second candle, let me just scroll this over. Got in on the second candle, right? And you're just following it. You just hold the trade, the short in this case, until you see a doji. When you see a doji, you put your stop right above the doji. In this case, you would have still been in, right? And your option always for any trade is to pick a target and close it. But if you're waiting for a stop, it would be the next doji, this thing. So your stop would be above the close, okay, and then you'd get stopped out. So you'd be in the trade 4361 to 3683, whatever that is. Let's just measure real quick. You can always measure if you hold shift and click. 18%, okay. So that's a good trade, right? It doesn't always work out like that, obviously. Because Heikin Ashi is lagging, it's not the best thing to use by itself. A lot of people use it with EMAs, or you can use it with Cloud, for instance. Let me also show you how to get Heikin Ashi. So if you click, normally it's selected for candles up here. There's a bunch of other stuff. I've talked about point and figure on another video, but so you just change from Heikin Ashi to candles. Candles to Heikin Ashi. And the real reason I don't use Heikin Ashi is because I'm such a pattern formation chart formation trader that when I use Heikin Ashi, it just messes with my head, and I'm too busy looking for patterns and not necessarily looking at the candlesticks. So if you're able to switch between the two, definitely go ahead and do that. But for me, it's just too confusing. So one way to use this with the cloud, which is my favorite indicator, is to wait for the TK cross and then open the trade based on whatever's going on. If this is, in this case, a bullish, bearish, etc. So you can see how well the red line's the Kijun, how well the Kijun just holds down price this whole time, even on Heikin Ashi. So you can see that's probably not a great place to enter a trade until we break the Kijun, okay? When the TK cross happens, that tells you there's even more momentum in the bullish direction, reversal from the bear trend here, or whatever you want to call it. So this gets you in earlier than the Kumo breakout would, which Kumo breakout would be about here. But you can see you don't really get, there's no real payoff. You don't really get rewarded. Let's say, you enter on this candle. I guess it would be either this candle or this candle. You just follow it, and then here's your doji. So your stop would be below here. I guess you could. I mean, it's so dependent on your stops with this system. So in this case, if you're playing stops like I was taught a very certain way. So if you are long on one of these candles, okay, here's your first doji. You put your stop here, which may be a break even at this point. You can see if you ride it, you don't get stopped out. If you're still in the trade, you don't get stopped out till here. But in actuality, what you do, every doji, you can move up your stop. You can see if you moved your stop up from here to here to here to here to here, you'd get out in this candle right here. So let's measure that real quick. Holding shift, we'll say 3%, 134 CNY. That's not bad for a sideways market. So it depends how nitty gritty you want to be. Again, this has all just been sideways. Let's take a look on the daily real quick. I don't actually know what this looks like. Alright. So again, TK cross, you could go long. You don't really get the opportunity for a doji, something, crazy pullback. So I don't know. I'm not a huge fan of Heikin Ashi. I forget who asked me to show Heikin Ashi. But again, that's one way to play it. So you're in the long, you're just moving your stop up after each doji, and you just hold the trade. So you get stopped out. If you put your stop on this doji, you get stopped out. So it really depends which time frame you want to play it. I mean, you can play it on the 15-minute. Right now, questionable. There's a TK cross. It's pretty noisy. Flat Kumo here. 40.51. So lastly, let's just move to the weekly and look at some prior trends. So you see all these closes are not below the previous open. All these opens are not below the previous open. So you can see how strong of a trend that is. I'm looking at these 3 candles right here. So let's say you saw, 2. I don't know, whatever your rule is going to be. If it's 2 candles, if you're looking at a naked Heikin Ashi chart, or, if you add EMAs or whatever you want to do, 2 candles of the same color, either above or below, whatever they should be. If they're bullish, they should be above the previous. If the close is above the previous close as well, it's a bonus. So let's say after these 2 you enter the trade, you're still in the trade, here's a doji, so you wait for the doji, your stops here, still in the trade, doji, stops here, still in the trade, here is where you get stopped out. So that was this is the ascending triangle, if you don't recognize it. And then again, let's look here, 2 green candles, above, they closed above, the open was above the previous open, so we're in the trade, doji, stop here, in the trade, doji, stop here, in the trade, and again, you can move up, and after the next doji, you can just move up your stop. Basically, if the candles are thin, that says there's weakness in the momentum, there's just sideways action. If the candles are fat, like this one, that means there's heavy momentum to one direction or the other. So not much on Heikin Ashi, but add it to your tool belt if you want. It's something you can sort of flip in between if you're on the fence as far as opening a trade or not, where my stop should be. The more stops you add to your system as like part of your system, I think the better. I mean, I use fractals as well. I talked about them in a previous video. They're also lagging, so it's harder to use them effectively. But basically, if you're in a bull trend you shouldn't have, so a bull fractal is a low, high, low, and a bear fractal is a high, low, high. So basically, if you're in a trade, you shouldn't be breaking bear fractals. So it's easier to see on the candle chart. Let's just take a look real quick. I guess it's the same. But again, let's say you're in a trade somewhere in here, even on this fourth candle, I don't know. You wait to place a stop until you see the fractal form for the bear fractal. So here's your stop. Here's your next stop. Here's your next stop. So you're in this trade the whole time, and you're finally stopped out when we break the bear fractal here. So you'd be in, let's say, just conservatively, you got it somewhere in here. Now that's a 1900 CNY trade. Okay, obviously that's like weeks of holding, but that's one example of another stop system you can use with Heikin Ashi or with candlesticks. So that's all I have on Heikin Ashi today. Like, dislike, share. If you use Heikin Ashi with something else, let me know, because I really don't use Heikin Ashi. But again, it's something to add to your tool belt, another sort of system to look at if you're sort of on the fence about something. It's really good at identifying sideways versus momentum in one direction or the another. So happy trading.